Hi there, Serial Trader here. I'm going to check in on the broader US markets, starting with SPX. So last time I left off with the possibility that we had this ABC down complete and that we'd be heading up and eventually on our way to new highs, and this blue line kind of illustrated the expected direction as long as those support levels held, which so far they have, and we have been trending up. But it's the nature, now that there's more information to observe, it's the nature in which we've been going up that has me not particularly excited for further upside here. And not to say it, won't continue up from here. And well, with that in mind, if we actually get above this level, so on SPX, that level would be 2801.90. If you can break above that, now I'm at that point I'd be willing to embrace that. We're actually heading up to new all-time highs, and that this was overall just an ABC down correction. But until the market really proves itself, if that actually happens, I think something else might be going on here. And let me explain. So I'll get rid of this blue line. We've followed that direction so far, although again, it's how we followed it that has me thinking something else. So instead of doing wave analysis on this, which is a little cumbersome because I have to make text notes for each label, I'll just switch on over to the trading view chart, which I've already labeled for this. Okay, and here we go. So here's what I actually think is more likely at this point, just based on what's been going on. So we still have a 1, 2, 3, 4, 5 down. That initial move down from those January highs, okay, to the February lows. And that actually made a large degree wave 1 by this labeling. We had our ABC up, and then a larger degree wave 2. And then we've had a 1, 2, 3, 4, 5 down, which has so far made our higher low above the February lows, and that's a smaller degree wave 1. And now we've had an A, B, C up. May not be complete as of today, although it looks like it's getting there, which would be a smaller degree wave 2. So you have a 1, 2 down, and then possibly a 1, 2 of 3, and then you'll have an extended third wave kicking off in actually a third of a third wave once this finishes up here. And that should be very obvious if it plays out that way, because usually a third of a third wave is quite a strong move. It moves a long distance in price in a short period of time. So with that in mind, what else is kind of having me lean towards that? Well, just the way that we've been going up. I mean, this does not look like a 5-wave advance. It does not look like an impulsive trending advance. I mean, really, if this is a new uptrend, then if you flip what happened here upside down, that January to February decline, that's what this should be looking like going this way if it was truly an impulsive advance off of a hard bottom. But instead we have a very choppy, overlapping, non-committal kind of uptrend. And also I'll remark, so this gap we had over here, we've just filled that gap today, and it's quite typical to fill a gap before continuing a move. In this case, continuation would be to the downside. And okay, what else do we have? So the 618 retracement of this smaller degree wave 1 down comes in at 2707. We've just nicked that today. And also the equality relationship between A and C off of the termination point of B here, that comes into play right in a similar area to that 618 retracement level at 2704.55. So we had kind of a Fibonacci cluster here, right in the range of a gap closure. We have what looks like a nice complete or nearly complete 3-wave advance. Also, today we actually gapped up, okay? And in this case, I think it's an exhaustion gap where you gap right before the move ends. In this case, the corrective rally gapped up just to have one last little throw for the bulls. So that's what I'm seeing at this point. And again, doesn't mean this is what's going to happen. It just means from a pattern recognition standpoint, as far as me trying as impartially as possible to look at this, this is what looks like is most likely at this present point in time, given the available price data. So again, this will be invalidated if we take out the origin of this move, which is 28.0190. So I would become extremely bullish if we were able to take that level out. But anything really technically up until that point, I mean, this is a wave 2 for this wave 1 here. You can go really, really deep in a wave 2. Although I prefer it, it would be more ideal if it stopped, where it is now or shortly thereafter, and then started to roll over. So this is the wave count that I'm leaning towards heavily. Now, myself personally, for trading, I'm still in a hedged position, so it's not really going to matter too much which way it goes. It just needs to start moving with some commitment here, and then my my option positions will do extremely well. And actually, at this point, I've been doing some follow-up action. I've actually sold calls against the long calls, just because I think the upside here is limited. Let's see. So yeah, I'm not really in a completely directionless position now. I now have negative delta. So now my position will start losing money on further upside, and it'll start gaining money on further downside here. And that could be changed if the chart's warranted, but at this point in time, that's my commitment. So let's go back here. I'll also mention RSI on the daily here has gone to right around that 55 handle. So it's right in that area of bear market resistance between 50 and 60. And you see in the previous attempts here, that was just kind of a zone where it encountered resistance and then just rolled back over. Let's go to the other chart. SPX. Okay, candlestick chart. So also on my oscillator, my stochastics here, it's overbought, and this has been quite reliable for tops and bottoms for this move. So this was quite a good top. This was a good top. This was a good bottom. This was a good bottom. Good bottom. So ever since the peak here and the subsequent action, this has been good at nailing the peaks and troughs of the market. Just as a complementary oscillator. It just adds to what I'm already seeing. Okay, so again, gap up today here, and upper wick, so a rejection of these prices, and actually kind of a rejection in this Fibonacci cluster that I was showing in the other chart there. And okay, so right now we're above the T line and the 3T line. So, I mean, you wouldn't want to necessarily start shorting this without at least seeing it starting to roll over. And this trend line here, a break of that trend line, which has been kind of the uptrend support line, that'd be a good early sign that this is starting to head down. And the next level, if it doesn't stop here at this fib area, the 78.6% retracement, and that would come in at 27.4881 on SPX. So keep that in mind. And again, just really liking, just to show this on this chart as I showed on the other, really liking this this gap fill that we did along with this Fibonacci resistance. That's looking really good. If it starts reversing basically immediately from here, that'll be an extremely nice signature. Okay, moving on to the Dow Jones. So really similar as to what's going on SPX, and the expectations would certainly be the same. I'm not going to say much else because really SPX is the most heavily weighted for me. That's what I use as kind of my market gauge of what's going to happen broadly. And the Dow is just complementary. And the NASDAQ composite, Same idea, way to gap up today. And actually the NASDAQ didn't even go up to fill its gap yet. So that might still happen tomorrow or later this week when we get a gap fill on the NASDAQ. And that could be the end of the move. And just for interest's sake, let's see where we are as far as retracing this initial move down. So we're not quite at the 61.8% retracement level. And actually if we get there, that would be the gap close we're looking for. So NASDAQ might have a little room to run there. Short term. Interesting. And VIX. So the VIX, since prices have been advancing, VIX has been declining, which is exactly what you'd expect. But now VIX is actually oversold with this oscillator. And as of right now, it's still made a higher low from the low it made here at 1331. So it'd be interesting to see what happens. If you're bullish, I would be very cautious here, tightening stops or hedging your position, however you want to play it. And if you're bearish, or if you want to become bearish, which I think might be warranted here pretty quickly, wait for a little confirmation. Wait for it to at least start rolling over, making some lower lows, lower highs on like a hourly chart or something like that. But I just thought I'd bring it to your attention because even though I was kind of embracing the possibility of a bottom and continued upside, just the way this has advanced ever since. And let me go to this bar chart again. Let's do a 30-minute. Just the way that we've been advancing here. It's not an impulsive trending advance. Look at this. I mean, how do you get a 5-wave advance out of that? That just looks like a classic ABC up. And if you look at this, so if we have the slope here of our initial move, look how much shallower the second advance has been. That's typical of a C wave, not a third wave. And again, choppy, overlapping. Just, it looks ugly, which means it's corrective. That's really what it means. And also well contained within parallel trend lines, okay? Which corrections, again, corrective price action is typically contained within a parallel trend channel. So if this was really a 1, 2 and we had a 3 up, it should have been more like this, cleanly breaking out this trend channel, nice, acceleration in the third wave, impulsive looking, not overlapping. So I'll leave that with you, and we'll check in again if price action does something compelling this week. And this week might be kind of slow. Maybe we'll just hover around this area for a while before something happens. But I thought I'd bring it to your attention because that's certainly what I'm looking for, and I'm eyeing up a big bearish trade here soon if things confirm. All right, Serial Trader signing off.